Good morning, everyone. Good morning and welcome. Hold on, let me turn this off here. Mute that. Boom. And then, well, what can I say? Look at this market. I mean, I'm not going to say I told you so, but I think I wrote a newsletter saying this broken record has been pretty profitable. I hate sounding like a broken record and being one direction. I'm a trader. I like to trade back and forth, but I just haven't seen, much of a reason to get bearish on anything. And I think AI has a lot to do with that. I think flows have a lot to do with that. People are just kind of not in. Um, Let me see. How is my? Is it terrible sound? Oh, terrible sound. Is it still pretty bad? Choppy, eh? All right. Let's see if I can get this microphone going here. Let me get the fancy mic. All right. Let me see. I know it's the connection. We need to get Starlink. Elon needs to get. Actually, we do have that. Hold on, Let me do the audio. We're gonna go over to
check. There we go. That should be better. Sorry, I'm a little under the weather, but I will try my best. So yeah, okay, great. Goss, Mike, Vicky, Reese, hey, Doug's here, Mike's here. This is awesome. It's Friday, and that's always good news because we get a couple days off for now until they come up with 24/7 trading. We are going to get a little bit of a break, and here we are. Another fantastic market, unrelenting market. I kind of thought maybe we'd get to 6,000, 60.50 and kind of just sort of digest things a little bit, but there is no digestion. All right, let me share my screen here. This market just is not interested in digesting. And I think there's probably a pretty good reason for that. So let's take a look at, I'm Hans Albrecht, by the way, for anyone who is new here, who is showing up for the first time, welcome. Thank you for coming. I've managed almost $1 billion in option strategies, 15 years as a market maker, pro market maker, long options, short options, you name it. I did everything. And then after that, 10 years of managing a whole bunch of options income funds, right? So $750 million in these funds that basically use covered calls and different strategies to basically harvest, right? And so that's why I'm the income guy. I'm the income guy. I'm also the AI guy. Ivy League, Oxford AI program, blah, 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 blah. I ran a suite of ETFs in that space, big data, where robotics, automation, stuff like that. So I'm kind of loving this new market because it's this next leg of AI that gets me kind of excited. Oh, Goss, did you just say there it is like 14 times in a row, or am I having like, is my brain glitching? Am I having AI hallucinations? Let me check that. Check. Oh, it did kind of glitch out, it looks like. Oh, it's a chat bug. Okay. It looked like Goss wrote that same thing like 14 times in a row. I think he was having like a seizure. Somebody help him. Somebody please go over and help Goss, because it looked like he's having a seizure, but he's okay. Don't worry. Oh, thank you. That's good to know. I was getting worried that it might be you, might be me. So anyway, I'm getting excited, right? So we're going to talk a little bit about the good, the bad, and the maybe, not the ugly. I mean, I might throw in an ugly here and there, but I think it's exciting times. I think the market has these sort of lying sort of under the hood sort of influences that keep pushing us up. So I want to show you one of them. Don't get too excited about this, but it's easy to understand. So in our world, we have more derivatives influence than ever. And that's why Andrew's always talking about it. Mark's always talking about it. Options, volatility. There are things happening under the hood that many people don't know about. And when you join Option Pit, or even if you just watch us in any of our free shows, you're going to learn a little bit about that. And that's going to make you a better, more informed trader and even investor. Because if you don't kind of know what's happening below the surface, if you don't know how to read the VIX, read volatility, read the VIX futures, look at these things. AUM in these leveraged ETFs, for example. Anybody trade those out there? SOXL, MSTX, there's a whole bunch of them. 2-time, 3-time. There's a 4-time levered one. Can't remember what it's on. I think it's in the UK. If anyone trades those, there is a lot of AUM going into derivative kinds of plays. And those products need to rebalance, right? So when we get a big run to the upside, those products, to maintain their 2-3-time leverage, if they're like they're called swap products. The person running that strategy has to buy more. So on a big rally, they've got to buy a whole bunch of stock. That exacerbates the rally. And then it goes the other way as well. Actually, you know what? I think I've got a chart of that here. I think that would be kind of cool to see. I'm going to talk about a couple of little things like that are pushing things around. Oh yeah. So here we go. Hopefully you guys can see this. Oh, I just happen to be on the right page. So levered ETF AUM, right? So this is the AUM has gone from 20 billion in these levered ETFs up to 120. And so they came off a little when we had the big sell-off, and we've come right back again. AUM in some of these things is the same as the non-levered version. So people love to play these things. And where are these things focused? Well, in technology. These aren't funds they don't put a levered product out on J&J. That's not going to sell. They are on technology, mag, semiconductors, Bitcoin, all kinds of stuff. Russell too, small times, a little bit of financials, but they're in the exciting areas of the economy, and happen to be the areas of the stock market that are heavily weighted, right? So when we go on a big run and these funds have to buy a whole bunch of NVIDIA and Microsoft and all these things, we can really push things around. And it works the other way too, which helped to exacerbate the sell-off in April. And so these are important things for us to note, is that this creates movement that we didn't have 10, 15, 25 years ago by virtue of these products just sort of mechanically doing things. And here's one that I'm going to tell you about for your water cooler talk later on today, when you go over to the water cooler and you're like, Hank, have you heard of vol control funds? Because if you haven't, I'm going to tell you about them. And the way they work is they're like the Terminator. They don't have emotion. What was the line from the Terminator? They feel no emotion. He doesn't care. He doesn't care about you. Now I've forgotten the line. But he just does what he does. He's the Terminator. These funds, when the water cooler in your house, I remember when people used to have those in their house. Now you just have the fancy tap that gives you the filtered water. You don't have to buy those big damn jugs anymore. So volatility funds, what do? It's very, very simple, and they're very influential. When volatility goes up, they have to sell the market. And when volatility goes down, they have to buy the market. They don't think about it. They're not like you and I. We kind of go, that chart's kind of looking good, or that chart's not looking good, or, I'm not feeling well today, so I'm not going to do something, or I don't like Apple because I think, they're idiots and they can't innovate anymore. They don't think of things that way. Vol goes up, they sell. Vol goes down, they buy. And so part of the big comeback over the last couple months is there are 1 month versions of these things, and they've bought back in, right? So that helped to push stocks up. And if you've been watching any of my shows, I've been saying, look, pain points to the upside. Nobody's in this market, and these are examples of how certain systematic things needed to get in. And so when volatility drops, this gray line is shorter term volatility, 1 month, and when it does this, these guys have to sell. And by the end of that sell-off, these guys were out. They were like zero allocated, first percentile, like almost not in at all, which you rarely see. And then when volatility started to drop on the other side of this mountain here that I'm showing you, this starts to drop. And guess what? They got to buy back in. I'll be back, says Jose. Yeah, that was his big line. He feels no remorse. He feels no pain. It's something like that. The Terminator just terminates. And so what do we have now? Well, we've had this big rally back from those shorter term funds. Now what happens? We've got these longer term ones that look at 3 months, kind of like the market, Hans. That's right. The Terminator. Well, in Turbo Income, we've been doing tons of AI trades, and we're up on pretty much most of them. And we're going to close a whole bunch of them today. Fantastic trades going on there, even in things that aren't quite like AI. Like I'll talk about one in a moment. And this is how you kind of have to, you're going to have to pivot a little bit in the way that you think of things. You can invest directly in a pure play AI, like a Palantir, like NVIDIA. You know, I think those things are great. I think NVIDIA is going to go to 250. I think it almost has to happen. It's just, and I don't care that they're 3 trillion. I love that argument that somebody goes, wait a minute, they're a $3 trillion company. How much bigger can they get? Oh, you'll see how much bigger they can get when they literally own the inference space, and everyone uses CUDA, and they have no choice but to buy more of this crap, more of these GPUs, more, the Saudis, everybody and his brother is going to be buying this stuff. So we'll see. I mean, there's AMD as well. They're a formidable competitor. Intel starting to break out a little bit today. It's green on my MTI, and I'm thinking about it. Yeah, approaching 4 trillion. So here we go. I don't, why can't NVIDIA be a 6, 7, 8 trillion dollar company? It's just a number. They don't trade. They're cheaper than Walmart, or maybe about the same after a little bit of a run here. So don't worry about market cap. Market cap doesn't have to do with that much. So what's going to happen is this red line is the 3-month volatility. So watch when this starts coming down. How does that come down? Number one, how does this 3-month rolling measure of volatility come down? What do you think is going to happen? Think of what happened in early April. What happens for this to start going, oh, volatility is dropping? It's kind of really lagging. It's 3 months. It's going, oh, vol is dropping. But that's based on what? That's based on early April coming off of the sample. So here we go. Look on the right side here, 3-month drop. So guess what? Today, we've dropped down 1% day from early April. And then a couple days, we're going to drop a 2%. And then in a few days next week, we're going to drop a 4.8% day, and then a 6% down day on the S&P. Look at all these big days. Here's a 9.5 up day. So that's not going to help it drop. But we are getting some severe dropping of data. And what this means for you guys in terms of what does this mean to me as a trader? The latest projection for vol targeting funds is 114 billion of S&P to buy. The largest estimated 1-month buy projection in our model's history since 2004. So if you want to think of things that continually add to the market, even though the market's not doing anything, that's the cool thing about volatility, right? Why do they keep buying every day? Because volatility is dropping. The market could flatline for a week, and these guys would have to keep buying more and more by virtue of nothing happening and volatility dropping. That's the kind of stuff that's going on out there. You have these massive, massive buys in the market from that. And then there's also, think of corporate buybacks. Look what's happening. Corporate buybacks are huge. What happens when there's tariffs and uncertainty and all this stuff? Well, nobody's investing as much, although they're going to have to be investing in R&D and innovation soon if they want to keep up with the Joneses in the AI race, which is part of my big theme, is that this is going to be gangbusters. And so here we are. This is some of the stuff we talked about in special situations AI in our event as well. We're going to do another one soon because this is just, there's no end to this, right? This isn't like talking about, you know, a sort of passing whim of a theme. This is ongoing. Stocks will go up, they're going to come down, but this is an ongoing theme. Look at corporate buybacks. Well, they don't know what to do. They're uncertainty, right? Uncertainty. Yeah, look, insiders are buying, and then corporate buybacks, they're buying the hell out of their stocks. They're like, okay, well, we don't know where, we don't know what's going on because of these tariffs and the the kind of direction of the country yet. And so we're just going to buy stock. So how about that? They're buying boatloads of stock. And now let's talk about one more just slightly difficult thing. Don't get scared. This is gamma. So what this means is don't worry about this too much. This is kind of related to what I talked about earlier. When you see positive gamma, that means there's support for the market. So that's part of why we've seen every dip get bought. People are not in the market, but there's also this market makers and dealers have this stock and futures to buy. So every time the market dips down, they go, oh, I'm buying. What happens to the upside? Well, we have a whole bunch of short gamma. Now, what this means is that it's the opposite of the green. So as we start to head up, excuse me, I've got this nasty chest thing. As we start to head up, and I talked about this, I don't know, a few shows ago, I said this, I'm not guaranteeing this to happen, but I think we're going to have a melt the heck up. At 5,600, I said, we're going to 6,500. I may have to revise that up if this keeps going and nothing breaks out there. I know that's a big if, but it's happening now, Jose. Yeah, it's happening, but that means there could be some fuel to the fire, right? So think of gamma as kindling. It's sitting there. It doesn't cause a problem, but it's sitting there, right? I had to deal with this as a market maker every day of my life. I had positions with positive gamma, and I had to buy the crap out of that stock if it sold off. If I had short gamma, I was nervous as hell, like a cat in a room full of rocking chairs. I'm like, oh man, if this market starts to get going, I'm gonna have to start buying the heck out of this thing. That's what could happen. This could add fuel to the fire from buybacks, from synthetic gamma, which we talked about with these leveraged ETFs, from people who aren't in the market yet. Now, I showed you some charts last week that showed that we have seen a rebalancing, right? So people aren't as out of the market as they used to be, but there's still more to come. And so this could actually, it's the kindling. So once you get a move that moves us into short gamma, then you get the fire starting, and then people have to start buying this market. So this is potentially out there. So what's behind it? Well, the things that I've been talking about, the flows, the people being offside. Guess who was smart this time? Retail. Retail got in on that sell-off, and they got in on the way up. And the so-called smart money, the institutions, those advisors out there who are like, well, we better not get in. It's just, things are scary in the world. They were all wrong and had to start allocating. And this is kind of creepy. I'm going to be with you throughout your life, says this guy. I'm going to be looking at your stuff. What stuff, Sam? What stuff exactly are you going to be looking at? My emails? My wife? Are you going to be like in my bathroom with me? If I have like a sensor in there, if I have like a device? I mean, that's what these guys want. They want to be everywhere, gathering data. And that, my friends, is something very, very exciting about this new inference phase. So let me find this. Oh yeah, here's skew as well. So look at the skew. Andrew talked about this last night. Skew is off the charts. And what skew means is people are buying puts. People are pushing up the price of puts. So this market is positioned. Now you might look at this and say, oh, everybody's really bearish. So be careful with how you interpret options information. This doesn't necessarily mean people are bearish. It could very well mean that people are good and long and they want protection. So they're happy to sit there and be long an expensive market. I'm not going to pretend this is an expensive market. 21 times, 21 and a half, 22 times. It's not cheap. This is not a cheap market. But they want to stay long, so they're buying protection. That's the way I see it, at least. And they're buying calls, right? They're buying out of the money calls. So look at that gamma. The market makers, typically when the market rallies, you kind of get, you get covered call funds. You get lots of funds selling calls and really replenishing that gamma. They're not really replenishing their gamma here. It's very interesting. It kind of makes me think people are buying lots of these things. They're getting the market makers offside. Again, fuel to the fire, melt up potential, like I've been talking about for 6 weeks. Melt up potential. I wanted to show you, what did I want to show you? Yeah. Oh, was it that one? No. Huh. Where was that little thingamajiggy? No, not there. Is it this one? Oh, yeah. Okay. Let's go here. And then this is me. This is me. Where's my trading floor picture? Anyway, this is me recommending Netflix and Costco a very long time at very, very low prices. So yes, I have my moments. But look at this. This is going to be the inference ignition surge, 100 times surge in inference workload. So think of what inference does. Yeah, it looks like a young guy. That was a few years ago. Think of what inference does. Training, you just kind of fill the computer, the AI, with a whole bunch of data. Inference is where you start to put that to work. It is much more compute heavy. It is much more energy hungry, right? We talk about energy needs at Option Pit all the time because this is a real thing. This isn't going away. There is not going to be enough power. That's why one of my favorite stocks is CCJ. There's all kinds of great uranium plays out there. This is not going away. That doesn't mean the stocks will only go up, but it's not going away. So we've got problems on the power side of things unless they figure out ways to kind of make these things more efficient, which could very well happen. But this is absolutely massive. So when you start to put ChatGPT or one of these AIs to work for you, it's doing many iterations, right? It's going over and over to try to reason and give you insight. That's very compute heavy. It's energy heavy. It's 20, 25 times more heavy than training. Right? That's why this is a huge phase for the picks and shovels makers, but it's also a huge phase for the economy, right? This is going to start to move throughout the economy, which is why a couple of the names that I mentioned in special situations AI are really in the right place at the right time to satisfy that, right? People are going to panic. They're going to be like, how the heck do I put this stuff to work for me? I don't know. Call the expert. Right? Call the fixer, like in Pulp Fiction. Call Harvey Keitel. He'll figure it out for us. I'm Mr. Reference, old reference. By 2030, we're going to have 500 plus zettabytes of data. So what this is going to create, think about what's going to happen. We're going to be data creators. Everything around us is going to be creating data. More and more data. What do you do with that? You need to store it. You need to crunch it, figure things out from it. The companies that do all those things are going to be very important. You need more data centers. You need more GPUs. You need more typical storage like in Equinix, but then you need smart storage, right? Things like CrowdWeave, which has had a good run. NBIS, right? These are going to be, and even, yeah, they're great at that stuff. And even, what was the one? I think even NVIDIA is starting to mow their lawn a little bit. They've got like kind of a cloud version. So not everybody can afford the full white glove AI GPU service. So companies are starting to like rent out and give like good rates. So we'll see some compression in pricing. But think of inference as sort of very feedback circular driven. Right? It's very circular and it creates a whole bunch. So my last point here is that up to now, it's been kind of 80% training, 20% inference. Now we're flipping to 20% training and 80% inference. The training's still big, right? Remember, the pie is getting bigger. So there's still tons of data centers, tons of stuff to build out. It's just that the pie is getting so big, and this part is what is going to sweep throughout economies, the inference part, where people are like, I got to put this stuff to work for me ASAP. And so I talked about, Snowflake and things like that. So I think that's very exciting. I want to look at a couple things in Turbo Income. Look at the SPY up again. It's just deadly. So here's your SPY starting to break above this level that we saw. I'd like to see a bit of green on the MTI, right? So we've been constructive. We've had little shoots of green. What do I like to see? I've been talking about how I think interest rates, I think yields are going to come down. I think AI is very, very, what's the next step after inference? Nirvana. Just, you don't even have to get out of bed anymore. AI will do everything for you. Chips in your head. Elon wants to put a chip in your head, and you'll just be able to think. You'll be like, Uber Eats, I want, a Big Mac, large fries, and it'll, like, a drone will come in, open your window, gently drop it in your bed, turn on your favorite movie, and you just won't have to move anymore. It'll be like WALL-E. Remember the movie WALL-E? Yeah, WALL-E, where they were like, no one even walks anymore. All these, like, big people are just kind of riding these, like, hovercrafts everywhere, and probably be like that. Unfortunately, yeah, that is a little bit sad. Cool Hand. That's, I wonder. I think, what's the stage after inference? Well, I don't know. We're gonna have to see. I think at some point we probably have an employment problem. So I think we're kind of entering into this sort of honeymoon period, and I think that's why you want to jump on board with Turbo Income. I really focus on AI. I've got, I think, 9 trades that are up really big right now. I'm going to start closing them today. We've got turbos, we've got traditional income plays, we've got upside plays, financed upside plays, like just all kinds of stuff for every kind of trader, every kind of account. And you get me filling your brain with all this stuff every day, so you don't have to read 25 emails every morning. Turbo Income's great. Thank you, Nina. I really appreciate that. And so I think what's going to be interesting is that I think we're going to have ebbs and flows in this theme, of course, and I think it's going to create some fantastic opportunities for us, and we're going to have a lot of fun doing it. So I think interest rates come down. I think TLT, it's kind of an interesting play, because I think there's going to be deflation, massive deflation at some point. And especially in the US, I think it kind of works for the US because, it's a lot of services and things like that. So it's going to kind of be a more of a plus for the US in a sense. It's going to be kind of, at some point it may cause some issues, but I think it's not as big a deal. Like, maybe on the good side, maybe we start to see a little bit of compression, which would be nice. I'd like to see my eggs go down. Another one, I like Uber. So we've got a position on Uber looking really nice. The MTI is green. So this is when we start to see that green MTI, very, very solid. That's where you start to think turbo, right? So part of Turbo Income is I'm greedy. I can't help it. And so we're going to go traditional income trades, but sometimes we're going to set ourselves up when the MTI gives us that information. We're going to set up for something much more spectacular. What was the other one I wanted to look at here? Socks, we've been in full green, beautiful, beautiful, trying to break out. It will eventually. Maybe we pull back a little, but this thing's going to go. It's just too good. I've been in Soxhole calls since about 16. Those are up 300%. Some really, really cool stuff happening out there. You don't have to get too complicated. I mean, NVIDIA is really, it's kind of cream of the crop. And I think AVGO is really, really good too. And I think one of the plays that we've done well on, I don't think you can kind of think outside the box a little. So look at Goldman. We've got a trade on that I'm going to probably close today. And I've got a whole bunch of turbos on this. myself and trades like that. I actually have a Leaps explosion trade on this because it's just going. Why is Goldman going? Good question, WNA. Why is Goldman going? Think of the IPOs. This is where I said IPO city, deals, IPOs, regulatory tailwinds from Trump, all kinds of great stuff starting to happen. And then look at this, boom. This is a company that is going to, the smartest guys in the room, the CEO came out and said, I can do an IPO for I can do 95% of what I used to do with AI. Think that's going to be cheap? Think they're going to save money on costs? They're going to save massive money. That's going to go right to the bottom line. They're not going to go to clients and say, you know what, I saved 50% on this IPO work. I'm such a good guy. I'm going to give you that money. No, they're not. They're going to make boatloads of cash. Now, it's had a little bit of a run here. I'd like to see a pullback before maybe adding, but this is the kind of company. JPM, I don't have any JPM, but it's doing a very similar thing, right? This is going to be very, very exciting times for these things. So Turbo Income, check it out, guys. I better go because I think Christian's probably giving me the hook here. Yeah, is he? Oh, he's not even giving me the hook. He's given up on the hook. He's given up on the hook. Okay, let's take a look at Turbo Income. Anyway, I'm gonna put this thing in there. I'm gonna put the link in there because, oh, here we go. There's a lot of ways to get involved. You don't have to make a big commitment unless you really, really like me, and I will appreciate that. So when we're greedy, WNA, we are going to take advantage, full advantage of the upside potential, right? We don't want to just make, if I can make $3, I'm happy. But if I see things starting to really develop into something special, I'd rather make 10 or 15 bucks on a trade, right? Times however many contracts, et cetera, et cetera. That's how you have to think of things. You've got to think of, thank you, Bruce and Matt and Goss. Thank you, everyone. You've got to think that way in markets, okay? Because sometimes as traders, you get stuck in the trees, you're down in there and you kind of get in your own world. It happens to me too. You're not zooming out. Sometimes you got to zoom out because the market wants to do the work for you. Sometimes you got to kind of grind it out and extract the money from the market. Sometimes you got to sort of position yourself so that you go, you know what, market, take it away. And that's how the turbo trades work. So Turbo Income, we've got Leaps trades too that we've done well on every single one, really well, 30, 40% on some of them. So no BS. We've got some great trades in there. And Intel, you know what? Okay, that's how I'm going to leave it. I'm going to leave it with Intel because I'm pretty sure I'm going to get the hook and people have to go to other shows. But look at Intel. Here we go. Super, super green right here. We're starting to get constructive. We're breaking out. I just bought some this morning. And it's not, I own some higher too, so I'm not going to lie to you. I'm out a little bit of money, but I think they could be in the right place at the right time. They trade around book value. They're incredibly cheap, price to sales, all that stuff. I know they're not NVIDIA. I know they're not AMD, but it could be slow moving, but it's not going to take too much good news for this thing to get to 30 bucks again. It's just, they've just absolutely sucked at what they do, but they have this incredible theme behind them. They have being American behind them. So they're going to be supported, we hope, and we're going to make Intel great again. And I think that's a very interesting opportunity. Like, I think just based on their assets and they have some success, right? Like, I mean, I'm looking at my computer right now. This is an Ultra 7. I mean, I always love to see a quality Intel chip in my computer. So in my view, you kind of have this downside of maybe like 19 bucks. And you have this upside of maybe 30. Who knows? If they start getting things right, think of IBM. They were kind of like the old, dusty, crappy company. I know AMD chips are great. So Intel's not going to compete with NVIDIA. They're going to compete maybe with AMD, right? They're going to be kind of like maybe for countries that can't, maybe for areas that can't afford as much. But apparently this, what's it called? I can't remember what the thing is called, but their product is actually not bad. Gaudi, I think it's called Gaudi 3. And apparently it's very, very good. So the question is this pie going to be massive enough for NVIDIA to kind of carve out a little piece of it? And I think, yeah, MEGA, there we go. Make Intel great again. Boom. We're going to share the credit for that one, WNA. We developed that idea together. So I think that's kind of cool. So I'm going to tell you right now, what I did is I went into the June 2026, right? I want to give myself time. When you go long options, you typically want to give yourself time to be right, because it's one of the only things you can control in markets. Now, sometimes you're going to do a trade and you're just going to have a great feeling. Like right now, you know, maybe like there's some, you know, once you have momentum on your side, right? Think of it this way. If you have, you know, unquestionable momentum happening, then I think you can kind of play a little bit shorter term. If you don't, then I think you have to move it out a little bit. And I like to move it out a little bit anyway. So what I did is I went out to the June 2026 20 call, and I picked these up for 635. I think I paid. I think I put it in at 635. I might have gotten filled at 630. I haven't looked yet, literally as I was coming on the show. So I bought a bunch of these. And if you think about it, there's some time value in this, but think about it. If Intel completely flops and this thing goes to $10, you're only going to lose $6 instead of $13, right? You don't want to oversize this. You want to size it similar. You know, if you're going to put 10 grand in this trade, you want to maybe put 3 grand into the leap. You don't want to get too crazy. You don't want to put 10 grand into the leap. Now you're levering up. So this is a trade where you know, you could maybe even, I mean, if you were really aggressive and you thought, boy, they could figure this crap out over the next year, you could maybe pick up an out of the money. But I like this high delta, right? This is going to give me some oomph right away. And I like plays like that. Like if I saw a undeniable breakout stock, I may position myself a little bit more aggressively and grab more leverage, maybe a few more contracts. But in this case, you can never be sure. I mean, until I start seeing this chart really rock and roll, you can never be sure that Intel's going to get going. Okay, folks, I've gone long enough. I hope you've enjoyed that. Please check out Turbo Income. It's really fantastic, and you get to hear stuff like that all the time. And I think people have done quite well. Why not spread it? Yeah, you could do that. Absolutely. You could sell a put spread. You know, I was thinking of that too. To be honest, Northport, Florida, man, I thought maybe you could finance it, right? Maybe you could sell like a 23.18 and you could grab like a couple dollars for that $5 spread and then use that to kind of maybe pick up a call spread. That's pretty smart. And then it limits your downside. With Intel, I wouldn't want to maybe just sell a put because I just don't trust them yet. At some point when I trust that they're on the right track, then maybe I would fully finance and sell, you know, a cash secured put and you know, pick up some leverage and really play that kind of risk reversal. That's kind of a cool way to go. But if you're trying to pick a bottom in a stock that's acting like crap, you got to be a little bit more careful. Okay, folks, thanks so much, and we'll catch you next time.